Hello traders and welcome back to the last video of 2020 here in our channel. I'm pretty happy to have been here with you this entire year. For some of you this past few months, but it doesn't matter. I wish you all a great 2021, and remember that if you want to be part of the team, the VIP team, uh, there's a link below this video, right? There's a surprise for you there. So why don't we continue, and let's start by looking at our last short-term trade of 2020, right? Was on the pound yen, on the pound USD, if you remember well. If you This was also said as a free trade analysis, right? If you remember, we were looking at the pound versus the US dollar, having reversed at the bottom of the move. We were looking at the possibility of a continuation. We did not get ticked in because we know what we are doing. And when the pound started to just move higher, we took that trade at the break of the highs and we hit our target for a nice 83 pip um, win, right? The next one is on gold. This gold trade was the last one, but actually the actual gold trade that we took, I don't remember where I have it, but we are still long from these lows right here for a for a 800 no 380 pip run, right? We took that trade at the bottom of the move. Well, let's see if I can find it actually. Why not, right? I reckon it's here. Yep, here it is. So this is the trade that we took. We took that buy right here when we saw that gold was rejecting the lows again, retesting that structure. We took that buy here when this candle started to form, and then we held on to hit first targets at 183 pips, and we are still holding that one for 382 pips and running. And we have actually deleted this take profit because we are going to be swing trading this one if possible. Now our stops are all the way above here at the 183. So we have secured a 185 pips. But that's not why we are here. We are here to learn how to manage a trade, right? And we are going to do this in gold. Let me just remove all drawings and let me just go ahead and this is a 30-minute chart. We're going to go a little bit higher. How to manage a trade and um, how to put your stop losses, right? Well, how to manage a trade, how to scale in on a trade, and how to scale out of a trade, right? Without damaging your risk to reward and without damaging your trading profits. Now, what we're going to be doing is going to take this example on that we have on our long trading gold right here. All right, so we took that trade at the 1864.50, and let's just draw a line here at the 1864.50, the coordinates, so 1864.50, okay, and we put our stops below the low, right, below the previous low. I always put my stop below the previous low. Why? Because if I put my stop at the current low, and let's go to the 15-minute chart and let this be lesson number one. We took that trade around the actually I remember that it wasn't when price was moving up. It was when I'm sorry about this. Hold on. It was when we actually created a new high. When we broke with these highs right here. So it was a flat triangle play at the bottom, right? And this is the reason I put my stop losses below the previous low. Should I have put my stop losses right here below the current low, my stop loss would have been triggered uh, just and then price would have moved in my direction, right? This is called a stop hunt. This is pretty typical, more so in commodities. So, I know it's good to have an amazing 1 to 17 risk to reward scenario, but you are going to be stopped out more times if what you are aiming at is just to um, well, to secure a tiny 2 pip stop loss, right? That's not gonna happen if you swing trade. So what you do here is you give your trade space to breathe, and when swing trading, you are going to have sometimes to take water into your ship, like we did in this gold trade right before we moved to the upside. And of course, that you are also going to look at the pullbacks, but that is for what comes next. So, rule number one, and let's write it down. Rule number one. Rule number one. Stops always below the previous high lows, right? That is what we are looking for. And let's lean a little bit down. Sure. All right. Rules. Stop. Rule number one, stops always below the previous low or below the previous high if you are in a short trade, right? So I guess it's pretty self-explanatory. When looking at the market structure, we're looking at this. This is and I'm going to actually use another color on my brush. Yep, because yeah, blue is going to be excellent for this. So what we want here is look at the market structure, right? And structurally speaking, we have a low here, and we have a low here, and then a higher low, right? And then boom, we broke to the upside. So where is the valley of this reversal pattern, reversal structure? The valley is the lowest low, but we are not going to be using this low as our stop loss positioning. We're going to use the previous low. Why? Because we want to avoid stop hunts. We want to avoid getting ticked out of our trade just before we see the market going our way. Right? This is going to give us slightly wider stop losses, but it's going to secure our trades from adverse price action or adverse immediate price action. Now, rule number two. Rule number two. Let's go to the 1 hour chart and let's do this. And let's go here. Rule number two, moving your stop losses, right? Securing your trade. Where would you have moved your stop losses or when? Now we're looking at the 1 hour chart, right? So our stop loss is this, right? We're going to color it red because red means danger. Our entry is at the blue line. This is our stop loss, right? And um, well, you have your targets, okay? You have your targets. And once your first targets are hit, all right, some people like to do this. When the first targets are hit, they like to move their stops to break even. I myself will not do that, right? Why? Because because I'm swing trading, right? And I like to see a base form. We are talking about here a long position. So I like to see a base form, right? This base that formed right here, and for that let's just thicken this chart out, right? After we entered, we saw price move up and hit our first targets around this level, and then it spiked up and moved down, right? But before it did, we formed this base right here, all right? Now, what happened here is that we know that this is where bulls have now been or are now being positioned. Why? Because of the rejections that we are seeing right here and the failure of sellers moving lower. Right, these wicks gives us that information. So when I see this, right after after price uh, hits my first target around this level, I will move my stops just below these weak lows. and I moved it at around 1868.68 or so, right? Now, now that I took half of my trade here, and let's put on a call out or a call out. I'm sorry. Oh boy, a call out right here. TP1 hit for 182 pips. TP1 hit for 182 pips, right? Right here. I'm going to move my stops to break even. Let's put a call out here. But it wasn't here, it was actually here. When those targets were here, I'm sorry, stops move to break even. And this is the anatomy of my trade, right? I'm just giving you the anatomy of my gold trade. Now I'll move myself to not to break even, but below the previous high. And here I was securing about 50 pips or so. And then what happened? Price moved down. And this is fine with me. Why? Because we are looking at long-term targets. Long-term targets. I mean, what we did here is we decided to eliminate the second target, which was around the 1910 or no 1908. So we eliminated that target right here. We also took before and uh, delete TP2, right? Why we deleted TP2? Because we decided that we were going to swing this trade. Why we decided that? Because we were respecting a very steep. I can delete this now. I have all the information that I needed. We are still respecting um, this long term. Let's call it mid to long term bullish structure. And what gold is creating here at the moment is another flat triangle right between the 1902 level and the 1910 level, right? We're creating a new flat triangle, so this means that the possibility of a bullish breakout is higher than the possibility of a reversal, more so with the US dollar crashing. So I decided to eliminate my TP2 because I wanted to swing this one right out of the cage, right? So that was the second thing that I did. And then gold just started to chop around these levels. Now, what I noticed about this is that gold was um, having uh, trouble moving above this level of resistance right here. So we're going to color this, let's color it magenta, shall we? That's fine. So what I did is I sent out I think that you saw it first here, right? But I deleted it. I deleted everything, so I mean that's fine. But I think that you saw that analysis of the breakout of this zone at the beginning of the um, of the video. So here it was a second opportunity to scale in, and here is how I do it: scale in at breakout, right? Now, the thing about this is that I mean, you have to look at these formations as bullish formations, for crying out loud. Most traders are going to be looking at this as a bearish formation, and that is not how this game is played, right? Because of what I told you, we were looking for long positions. We were respecting um, the bullish structure. We are looking for that breakout. Here is where we are going to make money on the New Year's. If you want to make money with us, of course, that the link is below this video with a happy surprise. Now, this is scaled in at the breakout. My stop losses would have had to go or went all the way here. So when I scale in on the breakout, I move my stop losses where I put the stop losses of the scale in on the breakout. And this is where my stop losses are positioned at the moment. Right. Now, what's going to happen? Right now, we are having difficulty with this level right here. It doesn't matter. I have secured already a happy 180 pips or so. This is, of course, a big difference. There is a big difference between 180 pips and currently 385 pips. It is a big difference, but that is just how you swing trade, right? If price breaks with this low, I'm going to look at it very closely because if price moves to the this is what happened. Right here, we were trapped inside of this range. Boom, bulls took control of that breakout, and now we're trapped inside of another range. And we are waiting for bulls to jump in again, and for us to scale in number two at this breakout right here, right here. So that is how you build a position, right? How you build a position. On the scale in, of course, that first targets have to be the previous key level, and you just take profit at the previous key level for half of your position, and then you let the other half run, right? So we have to make money on this, or money in the bank here and here, and of course that we are still running here with an open risk, right? But this open risk is lower than the open profit that we are running. So basically, we are running a break-even trade at the moment if price reverses on us harshly. But if price comes down here and breaks a little bit and then gives us a definitive sign of strength, which means that this level is, I mean, this level would be rejected, then instead of scaling in here, we are going to scale in here. And this is rule number three. Well, it doesn't matter, rule number one, two, three. I mean, I'm just giving you the dissection of this trade and the future of this trade, right? Now, if we scale in here, we are going to take profits here on half, and we are not going to scale in on this breakout. Why? Because our stops would have, well, we could actually, but because we don't know future price action, we don't know if we are going to create a higher low that will give us a better risk to reward on that scaling. So I'd rather be scaling in at the bottom of the range on a rejection than at the top. But in any case, this is how I trade. This is how I look at trades. This is, I mean, this is um, what I do. There's a lot of work put on every single one of my trades. It's not just uh, uh, take a trade and let's see where we take profits. As you can see, there's a lot of moves inside of one. And if you want to be part of the team, there's a link below this video. I wish you all a great 2021. Thank you for having been with us in 2020. And let's go ahead and let's rock it. Let's rock it on 2021.